Morning, everybody, and happy Monday. We'll get started here in just a second. All right. Good morning, everybody. And again, happy Monday. It's Monday, November the 18th. I think we're going to have a very interesting week ahead. We obviously have NVIDIA earnings on, I believe, Wednesday, which is going to be, I think, important for this market. And, it could be a positive surprise. It could be a negative surprise. I think we need to be very open-minded. And actually, I'd like to spend a bit of time on this right now as it relates to sort of our psychological management of all this. I hope you guys can hear me okay. By the way, I should mention, maybe if you can give us a quick yes in the chat box just to confirm, but I'm going to continue here. Yeah, so basically Wednesday earnings. So that's going to be the top thing we talk about today is how do we sort of manage around that? A lot of it is psychological. And, are we potentially falling into a trap of being either too bullish or maybe too bearish on something like this, and what that means from a broader sort of positioning perspective in our trading accounts and certainly in our portfolios as well. So this is our Set the Market morning show. In case you've never been here before, good morning. We are running this Monday through Thursday morning show, Set the Market. We're usually do 10 to 15 minutes. Go over the top, a couple of things in our mind. This morning, it's going to be NVIDIA. So let's go through it. So again, NVIDIA reporting earnings on the 20th, and it is an important toggle in terms of the market. So let's just have a look, and I'm just going to go through a couple of things here. But just I would like for people to be aware of the fact that NVIDIA is actually currently growing at a slower rate than it has before. It's not a bad company. It's just growing at a slower rate. And so the risk of an air pocket at some point in a name like this is real. Obviously, positioning is very bullish. It's very one-sided. So that leaves the room for error to become thinner and thinner and thinner. I'm not bearish NVIDIA, but I'm extremely open to this stock dropping 30+% and staying down for a while. Not tomorrow or not this week necessarily. That's very, very close timing. But I mean, just so you know, 30% gets us back to where the stock was in September. Like, that's literally nothing. Like, I'm actually, quite honestly, more in the 40 to 50% camp to the downside. And that's going to hurt a lot of people. So 40% will get us back to where the stock was in April. That's still nothing. 60% would be a bit more, would get us back to where the stock was in January. I think that's probably more realistic at some point. Again, I can't time this because the positioning is very positive, but that's something I think we need to be open-minded to. I realize this is an extremely unpopular sort of topic here. No one wants to hear this. No one wants to believe in it. But I'm telling you, the positioning that we see, and we talk to a lot of people, is extreme. It's extreme in every possible stretch of the imagination. This is a company that's trading, I think, 26 times forward sales. That's at the very height of its range. Again, none of this means the stock has to fall apart, but I would like to give you a couple of levels here that I think are probably worth watching, and we can then see how we want to react after earnings. I personally, for me, in full disclosure, I own NVIDIA in sort of a long-term portfolio, sort of like a long-term diversified portfolio. I do not own the stock as an individual trade. It's being long the S&P 500 is being long NVIDIA, if we're honest with ourselves. So I have no problem being long the S&P, although I think it's getting extremely stretched in its valuation as well. We're looking at 22, 23 forward earnings on the S&P, which historically is extremely stretched. But again, none of that means that the market has to fall apart. In fact, I can quickly show you this before we continue NVIDIA, not to sidetrack too much. But this is a chart that I would encourage everyone to let this sink in. And I'm going to spend a lot of time over the next month here as we round off the year to get people thinking about how are they positioned and could they stomach a down year. Most people can't. And could they stomach 5 years of low returns? Most people can't. And no one cares about that conversation, which is hopefully why I'm trying to have that conversation. We've had a 40% or 38% or something year-over-year return in the S&P. That's not normal. The S&P's up 25% year-to-date. That's not normal. And the forward earnings are also not normal. So we're likely going to see a much more volatile year in terms of headlines next year, even if it's just from the U.S. administration. That's very likely. In fact, that's a given. And I don't think people are taking that into account. So forward PE ratio for the S&P 500, if you look at, this is a 1990 to 2018 statistic. This doesn't have to be right now, but right now, for perspective, the S&P is currently trading somewhere up here in terms of forward earnings, right? Forward PE, so next year's PE. And so that's not cheap, right? So the margin of error is extremely low. And I don't know how many of you guys care the slightest bit what I'm talking about here right now, but I'm telling you, when you talk to real investors, like not gamblers and speculators, this is an important conversation because they don't want to be down 30% next year. And I think a lot of people will be down a lot over the next couple of years. Not because the S&P falls apart, but because everything that they own and they're concentrated in is going to underperform. So why does this matter? Why does the S&P forward earnings matter to NVIDIA? It matters because it speaks to the lack of room for error that we have. So let's talk about some levels at NVIDIA. First of all, personally, there's no chance in hell that I would ever hold a trading position through earnings. The stock can rally 10%, it can fall 10%. I have no idea. I couldn't care less because I think that's a completely speculative thing to do. What I can tell you, and I've mentioned this now for the past year or so after earnings reports, the stock has been gapping up after earnings more than most stocks do over the course of time. So if you look at, for example, when it first started gapping higher, this is the first real big up gap after earnings that the stock had in May of last year. Then it gapped up again after earnings. Let's see here. Oh, these are daily charts. Okay. Then it gapped higher again after earnings, the next report, and the one after that it did not. So it skipped one, and then it gapped higher again after that one, and again after that. And then the last earnings report, it did not. So basically 1, 2, 3, 4, 5, 6, 4 out of 6 times the stock has gapped higher, and then basically for the most part stayed up, even if it went back a little bit and retested and then went higher. So that's not something that's very normal. And I think we increasingly run the risk that the stock at some point has a down gap and stays down. Again, I don't know if this is this earnings report or we have to wait another quarter. I don't know, and I couldn't care less. But I'm telling you, there's an air pocket potential here that if this happens, and you're not going to be able to hide in another tech stock or another, this will drag down the market mathematically. So I'm not bearish NVIDIA, but I'm extremely mindful of an air pocket. And air pockets can happen for any given reason. There's a lot of companies that did double and triple ordering of these chips, largely to look good on earnings calls, and also because of FOMO, of course. And so it doesn't take much of a conversation. And by the way, NVIDIA's, I think, second or third largest customer is SMCI. They're potentially going to get delisted, super microcomputer. In the world of realism that I live in, that's not bullish. It may not be the end of the world for NVIDIA. It's not. But I'm not sure that's such a positive. Okay? So we want to think about it. So let's talk about levels a little bit. First of all, let me quickly do a little bit of math. And let's see, what is the expected move for NVIDIA? I'm going to quickly look at the weekly options here this week. This week we have the expiration is Let me quickly look at the calendar. So that'd be the 22nd, November 22nd, at the monies. So the way you calculate the expected move is you take the at the money put and call, and you add them together. So 140, let me see what the one closest one is. 142, so 7 plus, let's call it 7. So about 14 points, let's call it, is the expected move in either direction. So 14 points would be about, there you go, it's about 10%. Okay, so like I said before, so about 10% in either direction is the expected move. As you know, we can get surprises. The stock can go up a lot more. Certainly, it can go down a lot, go down a lot more as well. Either way, so 10% is about 157 on the upside. Let's put that here. That's the expected move to the upside, and to the downside. Again, you know, this is the prices as of today. Of course, prices will be different going into Wednesday, but down 10% would be, let's call that 127. So that's roughly the range. I'm sure the engineers among us are going to have a better number than this, a more accurate number. But considering that we're here just to try to get an average, I think I think that's close enough. So I would argue that there's an important level in this stock, and that's this green line. I would watch that green line very closely, because that green line is 150 period moving average, which this stock seems to care about for one reason or another. So if and this is a big if, right? Remember, I'm open to the stock doing anything, but if it were to break and hold below 117.50, that could be an opportunity for the stock to start panicking. But again, then we have the year-end dynamics, right? So the question is, even if the stock were to drop, wouldn't there be another chase into year-end, given the fact that, you know, fund managers that are underperforming have to kind of catch up? And I think there's a real chance of that as well. So long story short, Wednesday is important, meaning Thursday's price action. So company reports after the close on Wednesday. So are there any questions on this? I don't even know if anyone cares about this stuff, but I thought that NVIDIA might be something people would care about. But I would watch on the downside. I would watch 117 or so. Is probably the level to watch. On the upside, you know, anything can happen, obviously. But I would watch for upside exhaustion as well. That would be the other thing I would watch. I'm personally not in the camp of buying the stock on an up gap, just because of again, I'm a bit concerned about at some point an air pocket. Not because I'm not bearish on the stock, as I said, but I just want to be realistic about it. So anyway, I hope this was helpful. This is our 10, now almost 15 minutes here on a Monday morning. Please do give us thumbs up, like. Please subscribe to the channel, because that allows you to get alerted in real time when the show starts and when we do live analysis. We're going to do a lot more pop-up sessions, live analysis, and that allows you to be in the know of when those happen in real time. And of course, it also allows us to be able to continue to do this morning show. So please let us know if any feedback, if you like this or if you don't, right? Let us know what we can improve upon, and have a great start to the week.